Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening, as we're here now on Thursday. And we're at the 16th of November, 2023, just around 5:17 p.m. Central Time. I'm a little bit early, which is a good thing. As you can see, you've got a mixed bag on the reopening of the market and the stocks. They're basically holding together. Those that have been looking for a break aren't getting it. Keep in the back of your mind tomorrow's option expiration day, not in futures, in the stocks, individual stocks. This the 17th of November. Will that impact the market? There could be some short covering, is what traders I'm reading about, at least Market Watch and some of the others are pointing this out, that could be the event. We had a huge break today in the energy markets. I mean, didn't we just have two reports come out that are basically saying you're going to have tighter supplies next year? You're down to $77.50 in the Brent. You were just a market that was 84, 85. You'll see that in a little bit as we get there. Bonds and notes holding together. We saw today that the jobless claims went up about 12, 13,000, and the continuing claims up again 30. That's important. The market's not seeing that we're dropping back under the 200,000 number, and that's what the market wants to see for the Fed. The strangest thing that's going on is good news is it bull news or bear news when you get that? Walmart came out today as an example and said that they see sales down a little bit at the end of October, and they did some forward guidance, which was downward. Stock fell 8%. Go on your chart. You don't see 8% drops in a company like Walmart. So there's a lot of markets that are susceptible. We still have pretty rich PEs, and if you say the wrong thing, it appears you get yourself into trouble real fast. When I look at the gold market, I have to think to myself, I was listening to Loretta Mester today, for the Cleveland Fed president. She was on CNBC, interviewed with Steve Leisman, and she had it right. You know, inflation is still sticky. It's not collapsing. It's still sticky, and the Fed has a ways to go. Well, falling interest rates, a lower U.S. dollar, isn't that the world for gold? It just might be. That could be the things that make gold still good. As long as it stays over 1933.5, I do have an upward bias. So I started looking at the chart action, and I can tell you the ETF chart looks a lot better than the futures. But in looking at what you have right here, you have a market that's still lower highs, lower lows. That's still a bearish configuration. You're fighting a battle now. You've come up to, and that's where you're basically stalled. Where I so often teach, markets go back to an 18-day average to try to figure out what next. Now, the market went down, challenged the 100-day average in the Bollinger Band. And I know there'll be a few wise guys out there to go, but Ira, it went under it. It's an important zone. You'll see me say so often, I don't like that you buy over that first challenge of an 100-day average or a 200, or sell short under the first challenge of that. They come back to bite you. These are big long-term moving averages, and you test them, and often the test, you've wasted the energy to get up to them or down to them. When we come over here, you could see the battleground. I mean, it's at 1980.60. I don't see a trade pattern there unless you want to be short the market, which stops way up over here. I don't like that much. And you've come up. I don't have a reason in futures to be long. I don't have a reason to be short because you're trying to stay over the 18-day average. Hands in my pocket. Gold-silver ratio down to the 83 level and trying to hold. But it still favors silver since the market is under the 18-day average of closes. And you can see how silver has gotten up to the 100-day in the green, the gray, the 200 in the upper band. And it's used all that power, and it suddenly seems to have stalled. Would I teach my clients and tell them to buy a Bollinger Band to go higher? It's never going to happen. I can't imagine a circumstance that happens in. I'd rather say this is where I think the pros are coming out of the market. In the copper, you went back and challenged the combination of the upper Bollinger Band and the 100-day average, and it's just a lot of resistance in the market up there. Do I see a trend for it? There is none. You have a higher high and a lower low. You can't argue there's a trend on that. In the platinum market, as I told traders that I've been saying, the pros are probably going short here, but to put a $45 an ounce risk is an awful lot of money, and your stop has to be over that high. I'm not seeing it. Then we come to the dollar. So if I'm going to be truthful to what I teach, this is a spot to cover shorts, not a spot to get short. You're down to the 100-day average in the Bollinger Band in an oversold market. I'd rather miss out on trades than break what I've learned over many years that proves itself over and over instead of breaking my rules. I'd rather be frustrated. I won't break the rules. I'm going to stay with my discipline. Now, one of the disciplines that I have is I believe that the best weapon you have for your trading is right here, learning things. That's it. I'm not saying these are all the best, but I think they're phenomenal. And if you look at them, there's a whole array here that you sign up for. All you do is give a click on the blue. It puts any one of these into a cart, and at the bottom of the page, you'll see there's an email form and everything. You fill it out, and then we email it to you typically the next business day. The word is typically. You'd come in at the end here, and it's right like that. It's just like a cart you're at on any other place. We have to know where to send it. Just look at it that way. But free charting, handheld, what I have in my pocket all the time is our QT app. Number one, it was created and I had a say in it. I said, I can't read it. They made it where you hit a button on it and the type jumps up. I can read it anywhere. I'm driving. I don't want to kill myself. You set up your quote file. You say play, voice command. It plays your files for you so you can see where the markets are at. In other words, it's playing as you're listening to it. News, weather. If you're trading in the energy markets, the grains, you want to know about this. And not just U.S. weather. Weather maps from all over the southern hemisphere. We do a lot of talking about what's going on. How are the crops looking there? Example, Argentina, one of the worst droughts in 6 decades. You heard me. They're out of soybeans. Big problems going on. They have an election coming up. Next president's got his hands full. He's got 143% inflation, and he doesn't have their biggest crop, soybeans. Where's the money going to come from? Big nightmares. So you put this all together, the Arun indicator, the different indicators, the guide to technical trading, pick what you want. How do you get it? You go to iraepstein.com under free offers, or you can move your cursor right up here and take it that way. I'm Ira. Thanks for watching. I'll see you tomorrow.